Welcome back to Investing Talk Podcast. Today, we're digging into Xiaomi. The global tech player, big in smartphones, consumer gadgets, and now, making this really audacious leap into electric vehicles. He sent over some really interesting reports, and they paint this picture of, incredible growth, some really bold strategic moves. But I think the core question we need to tackle in this deep dive is this. Can a company that really built its name on affordable electronics genuinely challenge auto giants, like Tesla? Or is this huge pivot, possibly, a financial black hole waiting to happen? So our mission today is to pull out the critical insights from the material you shared, give you that quick but hopefully comprehensive overview of what's really driving Xiaomi's bold future. As we explore their finances, their big strategic moves, and what it all means for the tech landscape, if you find this valuable, please do consider subscribing, liking, commenting. It really helps others find us. And hey, if you're feeling generous, you can always buy us a coffee to support the show. Okay, let's unpack this, starting with the core numbers.
When we look at Xiaomi's financial health right now, what's really jumping out from their revenue and earnings?
Well, what's truly striking is just the sheer scale of their revenue expansion. I mean, we're looking at projected revenue for the most recent quarter hitting around $109.1 billion.
Wow.
Yeah, and that's a really robust sequential jump from $102.2 billion just the prior quarter. And over the past year, Xiaomi reported a pretty significant 48.8% increase in Q4 revenue.
Okay.
So this isn't just like small steps. It's a powerful surge, and it seems primarily fueled by strong sales across both their electric vehicle and their smartphone divisions.
Right, so both areas firing.
Exactly, yeah. And just to put that in perspective, their trailing 12 months revenue was sitting at $55.36 billion. That's a substantial 35% year-over-year increase. So it's clear they're grabbing significant market share.
That revenue growth certainly sounds impressive, very impressive. But, impressive revenue doesn't always translate directly to impressive profits.
Yeah.
What about profitability, specifically their earnings per share?
Right, you've hit on a really critical point there. The latest analyst consensus for EPS is $1.42 for Q2 2025. Now, that is an uptick from $1.25 in the prior quarter, so, it shows positive momentum.
Okay.
However, this is where it gets a bit nuanced. While the total revenue for Q2 was indeed robust, around $70 billion, the net income for that specific quarter, it actually dipped into a deficit. Around $1.5 billion.
Oof, a deficit. Why?
Yeah, and that deficit wasn't just like a minor blip. It points directly to the really intense upfront capital burn needed for their aggressive EV rollout, and also the costs tied to strengthening their supply chain.
Oh, okay. The price of ambition, maybe.
Kind of, yeah. It looks like a calculated short-term pain for that potential long-term gain. But if we step back and look at the bigger picture, the trailing 12 months net income was actually a positive $4.19 billion.
Okay. So overall, still positive.
Exactly. It reflects overall strong expansion and, underlying financial health, despite those specific quarterly challenges.
So if they're showing this massive revenue growth, but, like you said, recently dipped into a net income deficit because of these big expansion costs, what does that actually mean for their valuation? I'm particularly interested in their price-to-earnings ratio. You highlighted that one in the reports.
That really raises an important question for any investor looking at this. Xiaomi's PE ratio, it currently sits somewhere around 61.90 to 68.41.
60-something, wow.
Yeah. And if we connect this to the bigger picture, industry averages for tech and hardware companies are typically much lower, often around 20 to 30 maybe.
Right.
So this significantly higher PE, it's not just an expectation for future growth. It feels like the market is betting the house on Xiaomi's future. It's basically pricing in near perfect execution and, continued exponential expansion.
Near perfect. That sounds like high pressure.
It implies they have virtually no margin for error, really. The price-to-sales ratio, that's about 3.77 to 3.94, also higher than some hardware peers, but again, it's often seen as justified by those aggressive growth prospects and diversification.
That's a powerful insight. No margin for error. Okay, speaking of specific financial details, were there any metrics that seemed, less clear or maybe harder to pin down in the info we had? You mentioned some data gaps.
Yes, there were a few areas that required a bit more digging beyond the immediate materials we looked at. Specific figures for their debt-to-equity ratio, free cash flow, and return on equity weren't explicitly provided.
Right.
And similarly, a clear price-to-book ratio and comprehensive details on their dividend policy weren't readily available either. For those kinds of specifics, you'd really need to dive into their official regulatory filings.
Got it. Okay, moving beyond the raw numbers then, what gives Xiaomi its sort of true competitive edge in this incredibly tough global market? You mentioned some key strengths.
Well, Xiaomi seems to leverage a few critical strengths that really set them apart. One massive indicator is their planned $28 billion investment in R&D.
28 billion.
Over the next 5 years, yeah. This isn't just spending. It feels like a profound long-term commitment to innovation, to securing their technological leadership across various fields. They've also cultivated really strong global brand recognition, built on, that unique strategy of competitive pricing, but without really sacrificing product quality. That affordable premium thing seems to resonate globally.
Right, that's been their calling card for a while.
Exactly. And of course, they're continually expanding product portfolio. I mean, smartphones to a vast array of other consumer electronics and now obviously electric vehicles. It significantly enhances their market reach and gives them resilience against, potential downturns in any single sector.
That makes a lot of sense. So with these strengths, this huge R&D push, where do they actually stand in terms of market position, especially in their core smartphone segments and, this high-stakes new EV venture?
Well, in smartphones, they're either a dominant leader or a very strong challenger in key markets. Like, they hold the #1 spot in India.
Still.
Okay. Yeah, and they're rapidly gaining significant share in Europe, too. This international diversification, that's a considerable strength. About half their revenue now comes from outside China.
Which helps with regulatory risk, I imagine.
It does, yeah. It helps mitigate that risk tied to any single market. Now, in electric vehicles, they are, without question, an emerging force, a challenger. They have this really ambitious goal to deliver 350,000 EVs in 2025.
350,000, that's ambitious.
It is. If they achieve that, it would position them as a really serious contender, though, certainly not yet dominant compared to giants like Tesla or the established automakers. It's a bold play, but they seem to be executing with speed.
It sounds like they're definitely riding a wave of global demand, particularly with the EV expansion.
Oh.
What are the broader industry trends that are genuinely benefiting Xiaomi right now? And conversely, what are the most significant risks you see on the horizon for a company juggling so much?
The growth drivers seem pretty clear. There's the surging global demand for consumer electronics generally, which is lifting a lot of boats in this sector. And then their aggressive move into EVs, which obviously opens up an entirely new high-growth market segment for them.
Right.
Their proactive strategic supply chain investments also seem to be boosting operational efficiency, which is, vital. However, the risks are equally significant, maybe more so.
Such as?
Well, economic and geopolitical tensions can broadly impact tech stocks, right? And Xiaomi isn't immune. Competition is definitely intensifying across the board, not just in their traditional tech hardware markets, but maybe even more fiercely in the super capital-intensive EV sector.
Makes sense.
And, as you know, regulatory uncertainties across international markets, that remains a persistent concern, could potentially affect their operations, market access, all that.
Navigating such a complex landscape with all these, growth drivers and these big risks, it really takes astute leadership. Who's actually steering Xiaomi through these ambitious waters, and what can we tell about their long-term vision?
Well, CEO Lei Yun, he continues to be at the helm. He has a long, proven track record of guiding Xiaomi through various rapid expansion phases. He's consistently emphasized R&D-led growth strategies.
Okay, so he's been there through the pivots.
Absolutely. He's been instrumental in their strategic pivots and diversification efforts, including this massive move into EVs. Now, as for other executive details or, say, insider trading activity, the reports we looked at didn't explicitly detail specific trends or transactions there.
Right.
So that suggests you'd need a deeper look into their official regulatory filings for that kind of granular insight.
Understood. We touched on the PE ratio earlier, noting how, elevated it is. But let's talk a bit more broadly about valuation and risk factors.
Yeah.
How should an investor really view Xiaomi's current price in relation to its potential, especially given those high expectations you mentioned?
Yeah, those elevated valuation multiples, particularly the PE ratio, when you see it sitting significantly higher than peers like Apple, which is around 28, or Lenovo around 9, that's a key indicator.
It really jumps out, doesn't it?
It does. And while their price to sales ratio is more moderate, maybe around 4, the market is undoubtedly pricing in a massive amount of future growth and potential for innovation. It indicates investors are already anticipating strong, almost flawless performance down the road.
So very little room for error baked in.
Exactly. It leaves very little room for missteps or, unexpected headwinds. Essentially, you're paying a premium today for a future that hasn't fully materialized yet.
And what are the major risk factors we need to keep front of mind? Specifically those maybe stemming from recent news or just the broader economic climate.
Well, major risks definitely include their exposure to global supply chain disruptions. I mean, even with their proactive investments to strengthen those chains, a big global shock could still impact them significantly.
It's true.
Geopolitical and economic volatility also continues to affect tech sector valuations worldwide, and Xiaomi is certainly not immune to those broader currents. And as we've noted, competition is just intensifying rapidly. In smartphones, consumer electronics, and now in EVs, where the capital requirements are incredibly high.
Right. And remember that Q2 net income dip we discussed?
Yeah.
That kind of suggests operational challenges have led to squeezed margins recently, despite those high revenues. That's something investors should watch closely, for underlying cost pressures.
Okay, let's put Xiaomi in context a bit. How does it really stack up against some of its well-known peers, like, say, Apple or Samsung, and what recent events have really moved the needle for the company lately?
Sure. So when you compare Xiaomi's PE, let's say around 47.53, to Apple's 28 or Lenovo's 9, you immediately see that much higher valuation for Xiaomi.
Yeah.
Now, this isn't just a number. It reflects the market's stronger conviction, or maybe hope, in Xiaomi's innovation pipeline and their aggressive future growth story. While Apple undeniably boasts higher profit margins.
Right. Xiaomi demonstrates significantly faster top-line growth. And compared to Lenovo, Xiaomi consistently commands those higher valuation multiples, again, likely because of that perceived stronger innovation and a more dynamic growth narrative. And recent events have definitely been impactful, shifting investor sentiment. Remember June 26, 2025, the stock surged over 11%.
I remember seeing that, yeah. What was the trigger?
It followed the announcement of a strategic supply chain stake acquisition. That move is being widely interpreted as significantly strengthening their operational resilience, giving them more direct control over production. A very positive sign in this volatile supply chain environment.
Okay, that makes sense.
Then, of course, there's the ongoing, really aggressive expansion into electric vehicles, spearheaded by the recent launch of their YU7 electric SUV.
The YU7, right?
Yeah, that bold move generated significant positive momentum, partly because it's actively undercutting Tesla on price. It positions Xiaomi as a formidable new contender, like right out of the gate.
Undercutting Tesla on price. That's a bold opening move. Okay, so it sounds like a lot of positive momentum from these strategic plays. What's the overall sentiment around the company right now, especially after these events and, considering that central question we posed about their EV ambitions?
Investor sentiment, especially if you look at, say, social media platforms, it's generally quite positive, particularly after that recent stock surge. There's clear optimism around their strategic direction, the potential of their innovation pipeline, especially regarding the EV venture. Analysts, for their part, they largely lean towards outperform or buy ratings. They frequently cite continued international growth potential as a key driver.
But there's always a but, isn't there?
Well, yeah. It's worth noting some caution persists regarding the valuation levels, especially after such a sharp run-up this year. It suggests some investors might be waiting for a potential pullback or maybe just clearer proof of execution before jumping in further.
Right, understandable. So as we look ahead then, what should we be looking for next with Xiaomi? What are the key opportunities and challenges that could really influence its trajectory going forward?
Okay, well, an upcoming catalyst to watch very closely is their next earnings report, scheduled for August 19th, 2025.
August 19th, okay.
Investors will be keenly watching for signs of continued margin improvement, especially given those recent operational challenges, that net income dip last quarter.
Right. Proof they're managing the costs.
Exactly. And any insights into the early performance of their new product launches, particularly the YU7 EV, will also be critical. That's really going to be the first proper temperature check on how their, audacious automotive gamble is paying off. On the risk side, regulatory changes affecting Chinese tech companies remain an ongoing concern. Even with their increased overseas exposure, that's still a factor.
Always looming.
Yeah. Competition remains fierce, not just in smartphones, but now maybe even more intensely, in the automotive and EV markets. That requires just substantial capital investment and long-term commitment. And then there's that persistent valuation risk we keep coming back to. If future earnings don't keep pace with current expectations given those elevated PE ratios, well, that could lead to significant volatility and a potential correction in the stock price. It's definitely a high-stakes game they're playing.
Okay, bringing it all together then. What's your summary assessment of Xiaomi? And how should someone like our listener approach it based on everything we've discussed today?
Well, based on the current data we've reviewed, I think a hold or maybe a cautious buy approach seems warranted for most investors right now.
Hold or cautious buy? Okay.
Look, Xiaomi clearly demonstrates impressive revenue and net income growth overall. Successful geographic diversification, that's a big plus. And genuinely ambitious moves into the automotive sector. These are powerful strengths, no doubt. However, the stock is trading at elevated valuations compared to its peers. That reflects very high expectations already baked into the price.
Right, paying for perfection.
Somewhat, yeah. So for you, as an investor, this means being really mindful of potential volatility. That could be tied to execution risks in new markets, like EVs, as well as those broader macroeconomic and regulatory headwinds that could hit the tech sector. Now, for long-term investors who are comfortable with, let's say, an above-average risk and reward profile, and who firmly believe Xiaomi can sustain double-digit top-line expansion for years to come.
The true believers in the EV strategy.
Exactly. Those who believe they can challenge the auto titans and avoid that financial black hole scenario. For them, perhaps a modest position might be considered. But I'd say definitely pending those next quarter results and getting a clearer picture of their EV rollout efficiency.
So there you have it. Our deep dive into Xiaomi. We've explored the numbers, their big strategic plays, the leadership steering the ship. We asked that core question. Can a smartphone giant truly challenge the auto titans, or is this EV pivot potentially a financial black hole? And the answer, well, as always, it seems pretty nuanced. It really rests heavily on their execution in the coming quarters, doesn't it? What stands out to you from this whole discussion? How do you see Xiaomi's strategic bets playing out in the years ahead, especially with this massive investment in electric vehicles? Maybe consider how their ability to balance that rapid expansion with actually maintaining profitability will define their next chapter. Thank you for joining us for this deep dive. Until next time, keep exploring, keep learning, and definitely keep asking those important questions.